What's up, guys? So I wanted to make a recap of a losing trade that I took earlier this week. And honestly, I'm making this video because I was pretty embarrassed I even took this trade. So we're going to break it down and what I did wrong. It's one very, very simple mistake. Okay. So looking here at TLT, this is the 20-year bond. And basically, after FOMC, I was looking for a continuation on this. I was looking for a continuation higher. And we had a 30-minute buy signal. And I believe we had a 15-minute. Yeah, it was a 15-minute buy signal, but not A plus. And what I did was I bought it right into resistance. This was the 618 from this retracement right here, from here to here. And I actually, let me double check that real quick. Make sure I'm quoting the right things. So yeah, it was the retracement from here to here. And I was looking for a continuation into the $100 price level. And you can see I still have my alert there because it never got there. But I had 30-minute buy signals. And I was looking for the continuation up after FOMC, kind of hinting that we're probably going to get rate cuts, right? Okay, so there's three problems with this trade that I took here. Okay, so you can see here's buy signals here, and it worked out really well. This is the next time we got A plus signals, and it is what it is. It was a losing trade, and so here are the things that I made mistakes on, so hopefully you can avoid them in the future. So the first thing is that one, I bought into resistance. Okay. I was not buying a trade into or near support. I was buying it at resistance, which was a terrible idea. Okay. So that was the first thing. We bought the trade at resistance. That's the first mistake. Okay. Second mistake is we are far away from that 21 EMA. We're even far away from the 9 EMA. So another thing that I did wrong was one, bought at resistance, two, went in far away from the 21 EMA. The loss would have been much smaller if I simply would have set a buy order at the 21 EMA and took my loss. But what happened is I decided to chase, and dogs that chase cars eventually get ran over, so they say, and that's exactly what happened. Bought bait at the top, rolled over back to the 21, was a reversion to the mean. The further away you get from the stop, or the further you get away from the 21 EMA, the sooner it will revert back to the mean. And so what happened to me was I got caught in a reversion to the mean. So that's just part of the game. It is what it is. And I took the loss, or took the loss. And then the last and final point. So first, bought at resistance. Second, we bought really far away from the mean. Third, I don't trade this very often. Now, granted, the buy signals work on whatever stock you're trading or whatever thing you're trading. Like you can see sell signal here, it worked. And that was the last signal. And 30-minute buy signals here worked. We can check all these different time frames, and this thing gaps around like crazy. But I don't normally trade this. I specialize in trading the stock market, and I'm wasting my time over here trading TLT. It's just a waste of time and energy. And that goes back to, and so that's kind of the recap of this losing trade here. Now, here's the things. Here's why this is a waste of time. It's a waste of mental capital, because when you trade random things that you are not familiar with, you're just wasting your time. And how are you going to size heavy into something that you're not familiar with? Okay. So, like, for example, I took QQQ calls earlier this week, played out excellent. And we went long NASDAQ futures. I felt comfortable sizing heavy into this trade because that's kind of my niche. Okay. Same thing here. We got in calls, and also traded this to the upside and caught the gap up. But we traded that in spot, which was good for 60%. And so those were the two trades. And then I took a trade on my own this week, which was Amazon. And this ended up going like 150%. So we got in here and caught this move up here. And so these are things that I normally trade. Amazon is something that I normally trade. QQQ, SPY, stocks like that are things that I normally trade. And I spent a decent amount of my time this week trading things like Chewy. I traded Chewy, got in here, got caught a move up to the highs and flushed back down, and we got out at break even. Okay. Then I traded RTX. And so RTX, we went long somewhere in here, caught 15% on the move up, and then trimmed out some at 15%, and then eventually stopped out of the rest for minus 15%. And it's like, you're really like, I've never traded RTX before. The setup was there, but the setup is extremely important, but the stock that you trade is even more important, I'd say. And I'm beginning to learn that, and I've known that, but I need to be more disciplined with that. So if you can take that approach for yourself, I think you will be able to find yourself in a lot better situations. Granted, you're going to miss moves like this. Buy signals here, nice gap up the next day. And then you get buy signals here and you end up catching the end of the move, but that's just part of trading. Like you're going to catch, there you go. There's nice buy signals there, nice buy signals there. But you don't want to just trade anything and everything. Trade things that you're familiar with, that you know the personality of, that you find a niche, right? And my kind of focus has started to become, okay, I'm focusing on the indexes and then the major names. And then on top of that, I'm also like the Mag 7 stuff. And then I'm looking at these sectors, because really, what is a stock without the backing of its sector, right? So those are a few things that I began to work more heavily with in the past week or so. Not It's still a good week, but I gotta dial in my focus, narrow my focus, and really focus on my niche. So I hope this helps. Hope you can grab a few things out of it and help your trading become more profitable. But hope this helps. Thank you guys for watching, and I'll see you in the next video.